Woo! Here we go. Welcome back. True North, episode 54. Margin is not calling, and we're back with a brand new episode. We're going to get after it today. We've got the crew here. Despite the price of Bitcoin being down, we are going to grind through it. A lot of despair in the marketplace these days. And welcome back to True North, the investment grade Bitcoin podcast, where we talk about securitized Bitcoin. We talk about Bitcoin. We talk about what's happening in the financial world. We talk about leverage. We talk about capital structures. And I think we've got a pretty good show for you today. It might be a little bit of a quick one, just given the landscape of the market, and we'll crank through it. So today we're going to talk a little bit about capital structure 101, preferred equity design. We'll think about the macro of the Bitcoin landscape, kind of where we're at in the marketplace. Metalphoria, we might get into that a little bit. Risk market relativities, and then capital raises in 2026. I know Soleil's done a little bit of research on what's going on here, and obviously a lot of noise happening with like Tesla, SpaceX, OpenAI. We got to think through what that looks like. So without further ado, we've got a quick word from our friend Tim Kotzman.
Ladies and gentlemen, what you're about to hear may be amazing, but it is not financial advice. It's for informational and educational purposes only.
Back to you.
And we're back. Okay, there we go. We're gonna cook. All right, how are we feeling? Obviously, what are we at right now? Bitcoin is at 71,463, just absolutely grinding down. We've got a 42% drawdown, I think, from where we're at right now, from all-time high at 126,000. How are we feeling?
Early, I hope.
Early? I mean, it's pretty brutal out there, right? I mean, pets' heads are falling off. People are screaming for margin calls, as we've seen in every single one of these so far. And it's brutal out there. Mike, Dan, what are we thinking?
Look, brutal, sure. It's so much more fun when the price is going up. We all have to agree to that it's true. And I think what I'm looking at it, all the conversations that I had over the past week with the price action, what most people are that I've spoken to that are large holders or industry players, what they've all said is basically consistent with what we're seeing on the outside. They're baffled just like we are. I mean, Mike Novogratz, he posted this. There was a short video, it's 2 minutes long, and put in the stream. And what he said was, look, gold is ripping, silver, obviously silver has dropped down, but it does not appear that Bitcoin's going along with that. And he seemed to be baffled also. So that's my point. We all thought that Bitcoin would rip higher than gold, but it appears to be decoupled from gold right now for whatever reason, and just weather the storm.
Yeah, that decoupling I think is what is causing a lot of people indigestion. Is it's like, okay, these things, it's supposed to pump everything. Why are some things pumping, but our bags are not pumping? So that's kind of like causing some heartburn.
Yeah, the debasement trade not hitting Bitcoin, it's hitting gold and silver, and people are like, wait, isn't Bitcoin supposed to move with this? Yeah, that's it. It's an interesting argument.
I mean, I'd also argue, and like people are saying, like this is the debasement trade. I mean, true inflation is below 1% here. We're seeing liquidity kind of stagnate in the U.S. markets, but we're seeing the People's Bank of China injecting mass amounts of liquidity. And if you overlay the People's Bank of China liquidity injections with or total money supply with gold, like they're clearly printing money to back their currency with gold as kind of to get off the US dollar standard. And gold is a massive market. So I don't think it's any surprise that Bitcoin's not moving with gold here, because we kind of see the drivers of this gold trade, which is, large macro funds piling on as China buys the hell out of gold. But I think, 5 monthly candles here in the red is definitely tough for anyone.
Yeah, but Dan, I agree with what you're saying. I'm going to give you a good point here. The reason why gold is going higher is because central banks are buying it, right? I mean, it's not the guy that's living somewhere, in any state in the U.S. or somewhere around the world. Some guy shows up and he's like, oh, I'm going to buy 20 grand worth of gold at my local gold dealer. That's not forcing the price of gold up.
Trillions of dollars.
Right. It's up trillions. Right. That's from a central bank buying it. And I'm not making a value judgment here. I'm just saying that it's not from retail. The reason why gold is ripping higher.
Exactly.
So, yeah. So I'm agreeing with you. You guys want to hear, this is a concept that I haven't discussed with you guys, even privately. Maybe it's an inversion. And I'll explain what this is. We think that Bitcoin's supposed to go up because of money printing and so forth. But I think what happened is there used to be 2.5 million Bitcoins on exchanges. And between strategy and IBIT, spot Bitcoin ETFs, they picked up maybe net 500,000 Bitcoins on the spot Bitcoin ETF because they rolled out a GBTC. And then you have strategy over the past, 2 years acquired another 500,000 Bitcoins. So there's about 1 million Bitcoins that are off the exchanges, right? So now what happens is you have a smaller pool of Bitcoin that's on exchanges. So from that perspective, people that like to short and make, the perps, or to make this, a grind trade down, there's less Bitcoin. So to the downside, they have downside convexity because the pool of Bitcoins is smaller. Now many people think, well, if the pool is smaller, then the price should go up. Convexity works both to the upside and to the downside. And I think this is why you're seeing this now. Now, this is not as bad as 2022 or 2018 in terms of percentages, but I think this is why the expectation now is off. Oh, we wanted Bitcoin to come off the exchanges, right? To have this supply shock, right? There's less supply, and therefore the price should only go up. But coupled with the Binance 1010, October 10th, with MSCI FUD on MSTR, combined with tax loss selling, that all hit, not a conspiracy theory. It just happened to hit all into mid-October through November, and the price really hasn't recovered since then. And so that's where we are today. And we need to find a new bottom. And then I think that, from my view, is that, look, I've been in this for 8.5 years. If I didn't think it was going to come back up, I wouldn't be on the show right now.
Yeah.
Yeah.
I mean, if you liked it at 126, you're getting it for 40% off, 50% off. Buy one, get 150 off, right?
Right. By the way, this is not financial advice, but I would tell people, my belief is buy low and sell 20% when it's high. Right. But what happens is people FOMO in at the top, right? And so that drives the price even higher. But I think we have moved now to a true institutional play. And the retail is kind of out of it right now. So I think we will see the rotation.
Yeah, all the FUD is pretty much the same. It's just it hits a little different when the price is going down, right? All the FUD seems believable and credible when the price is going down, and you really, you can't just tell the bears to stuff it, temporarily. You're just kind of like handcuffed. You have to sit and take it.
But by the way, fun fact here, remember there was all the FUD about proof of reserves for strategy at the beginning of the year. And when we were, Jeff, you and I were on a stage in Las Vegas, and I was the host, and we were talking about it with Richard Byworth and Ben Work. We were on stage talking about this.
Yep.
Okay. Because people have short memories. So we talked about it, and we said, Michael Saylor has a video, why he doesn't do this. And you're like, okay, why am I bringing this up? So the same FUD returns again, 5 days ago.
Yep.
Interestingly enough, Mike Belshi of BitGo, and you're like, what the hell does this have to do with strategy? They took all of the employees off of LinkedIn so they would not be attack vectors in order for people to do, a phishing or some type of attack on the employees at LinkedIn. And they contacted LinkedIn to say, hey, we're going to remove our people off because people will target us because our people hold wallets for institutional access. And so this is all real. This happened live, and people are like, oh, well, it's not a big deal to post your wallets. No, I mean, think about what Mike Belshi just said, and their company just went public. And he's, by the way, in the book Bitcoin Billionaires by Ben Mesrick, which I read years ago, I could pull that back out. He was one of the guys referenced in the book.
Yeah, I mean, Bitcoin's been around for a long time, like 2014. They've been at the forefront of all this stuff. But it makes sense, right? You don't want an attack vector out there at all.
Look, the attacks are real. I got invited to be on a podcast, right, from somebody that I know on X, and it wasn't them. Their account was hacked, and when I clicked the link to the podcast, it was actually spyware. And they tried to, send the code and get me to give them the access code so they could get into my emails and, God knows what else. I was able to, detect it in time, but this stuff is for real, and it's on a monumentally greater scale for these companies than my personal stash.
100%.
Hey, I want a fun fact here. Here's the book. Bitcoin Billionaires, Ben Mesrick. Can you read the date on it? I read it on...
Yeah, I'm dyslexic, so I can read it.
Right. Yeah. So I read it on July 23rd, 2019, and I wrote the price of Bitcoin, 9,505. And I'm like, when's this freaking thing going to get over 10 grand? I was like, and this was after I got in May of 17, and it gone almost to 20,000. And I read the book and I wrote the price and I said, one day in the future, I'm going to, and this is a great book to read. You got the Winklevi twins in here, and Charlie Shrem and all the OGs and Eric Voorhees. So read the book. But look, 95. And back then I was like, oh, if we can only get back above 10 grand. And now we're all unhappy because it's, whatever, it's 71,000, whatever it is right now. And so, I don't think I'm an OG. I got in 2017, but hopefully that was helpful. I don't know.
Yeah, helpful. I'm going to share a little bit of background analysis that I'm just doing here. Why is it so small on my screen? I got to figure this out here. 1 second. Just looking at where we're at in the general grand scheme of things, looks like this is not wanting to work here. Well, maybe we can't get over there. Give me a second. But I was looking at the backdrop of, maybe I'll just zoom it in if this is the case. I was looking at the backdrop of Bitcoin versus the U.S. Fed funds rate. Here, let me see if I can make this bigger. That doesn't really work. Okay. Bitcoin versus U.S. M2 money supply. So what I've done here is I've taken an image of Bitcoin and I've pasted it in the background. And then I overlaid the US M2 money supply to look at where we were last time there was a 40% drawdown in Bitcoin and just the general macro environment. So I'm going to make this less transparent so you can kind of see the general thought here, right? It's connected the same day. So it goes from January 1st, 2020 to today, looking at M2 money supply and how that's changed over time. So I'll leave it here around 50% transparency. So this white line here is last cycle, there was a 40% drawdown, and looking at the macro environment, I think this is a helpful perspective. After there was a 40% drawdown in 2022, Bitcoin proceeded to draw down another 50%. So there's a lot of concerns that people are saying it's going to do the exact same thing here. It's going to go down another 50% to 38,000. And maybe it can, right? Like I don't know. I don't have a crystal ball, so I don't know exactly where this stuff is going, but I can make some connections to what was happening in the macro environment. So at that point in time, the M2 money supply was actually coming down. They were pulling liquidity out of the market. And you had Terra Luna collapse, you had FTX collapse, Celsius, BlockFi, all of these exchanges and institutions that get, they were over leveraged and got out of control. They went bust, right? So, and you had a political regime that was literally trying to kill crypto and kill all of these companies. So that's kind of the backdrop there. And you look at where we're at now, right? We've seen a 40% drawdown from the peak at 126,000. And that same environment just isn't really there, right? We're seeing macro liquidity. I mean, Dan spoke about it just previously. China's pumping liquidity into the market. I think there's a high likelihood that more liquidity comes into the market in the US here in the future. At least that's what the current speculations are on the horizon. So from there, I also did the same analysis on the short-term risk-free rate, US Fed funds rate. And I think this one is even more glaringly obvious. And I'm sorry this is so small. I'm on a new screen here. But same thing. I overlaid the US Fed funds rate from January 2020 to today and looking at what happened after the 40% drawdown. So after the 40% drawdown, there was a immediate change in interest rates. Interest rates went from 0 to 5. Right? Here, we'll make it less transparent so you can see it. interest rates went from 0 to 5. Basically, the risk-free rate effectively it went from like risk on, like there was a huge incentive to be risk on, and then when the risk-free rate jumps up to 5, people have a flight to safety, and we saw a significant reduction in all of the markets, right? S&P 500, QQQ, Bitcoin came down, everything kind of came down as the risk-free rate went higher. And you look at, again, the landscape of where we're at today. At that point, Bitcoin was down 40%, proceeded to go down another 50%, while interest rates did a, infinite jump from 0 to 5. And now today, Bitcoin's done a 40% drawdown, and you have the president of the United States like spittily yelling about how interest rates need to come down and saying that he's going to sue the future director of the Federal Reserve, the future chairman of the Federal Reserve, if he doesn't bring interest rates down. Like that's the environment we're in right now. And I really struggle to see, I mean, it's possible and it's probable that there's convexity here still to the downside, but we're just in a completely different environment, completely different political landscape, completely different liquidity environment. And there, at least to my knowledge, there's not as much leverage within the system as there were in past cycles where you've got bad actors. Like the entire market has learned from what's happened in FTX. You don't have all of the shitcoin schemes. You don't have NFTs going crazy. Interest rates aren't at 0. It's just a completely different environment. Everybody's learned from the past. So yeah, it's an interesting place here. What do you guys think?
Yeah, I got two thoughts on that. One, I think the MSTR chart is really, really interesting when overlaid on all this data, because I believe the 4-year cycle is front run via MSTR. People started selling MSTR long before Bitcoin finally peaked in October. And I think that was because a lot of people were putting on that long Bitcoin short MSTR hedge, which is a great way to participate in potential Bitcoin upside in the case that the rally continued, but also protect yourself in the case that there was a downside move, or even taking puts out on MSTR while holding spot Bitcoin. I think MSTR ultimately served as the drain of speculative Bitcoin money and a lot of hedging liquidity because of the volume in the options market and the equity, et cetera. And then there's also, ATM equity issuance that was pushing the price down. So I think that came kind of front run into the 4-year cycle. And now we're seeing everyone just be like, okay, 4-year cycle, whatever, like sell everything. I'm going to buy back next October. And so I think there is real human psychology at play here. And we'll see what the next few months bring. But I agree. I don't think the macro environment's that bad. I mean, someone just called it the SaaS apocalypse. And that's totally true. Like, if in Jordy's recent video, if you take out the top software names from the NASDAQ, it's all the drawdowns like getting close to the 2022 low. So what you're seeing in Bitcoin is similar action to the 2022 pullback. What you're seeing in software is very similar to the 2022 pullback, but what you're seeing in energy stocks and industrials is they're moving aggressively, broadening out the market, and sustaining kind of the Nasdaq and the S&P. So that's why I believe this idea that the indices are going to collapse this year is completely faulty. And then we had a massive 52.7% PMI print, which is the largest jump in over 4 years, above into expansionary territory on Monday. Like, I mean, you don't look at this stuff and think the economy's collapsing. Like, labor market's soft, but AI. So
can I do a non sequitur here? So Dan, my question to you is, are you going to be wearing that hoodie tomorrow?
I'm going to put on a collared shirt.
Are you going to shave?
Depends if I get to bed early enough tonight.
Okay.
For those that don't know, Dan's asking a question on the earnings call tomorrow. So you get to be the analyst that represents True North, and which is fantastic.
Has Sailor reposted this stream yet?
Yeah, we got a Sailor repost. Sailor's birthday. We got a birthday repost. Yeah, we're cooking.
So before we go on, so I could talk about your stuff. So all you guys are, what, guys? I was thinking maybe we should all go to Las Vegas and hang out there. You think that sounds like a good idea?
I'm there.
I'm down.
Yeah, you're down? When are you guys going to be there?
Yeah, I'm there Sunday. Yeah, I get in February 23rd. It's going to be a good time. We have an event coming up. It is a True North Inside event. It's happening at Vegas. It is on Monday, February 23rd. It's going to happen from 1 p.m. to 5 p.m. And then there is an evening after party as well. It's a good time to bring up the schedule there, Grain, and I'm pulling it up here. We've developed a schedule a little bit more. This is going to be a very unique in-person event. None of it's going to be recorded. These conversations are only going to happen here, and our goal is to give like the highest bang for buck alpha of what's actually happening in the industry from people that are working in the space. We've been spending a lot of time behind the scenes getting this dialed in, and I am excited to share with you what that is going to look like. And here is the schedule. For those that are interested, we are going to have the first half is going to be True North discussion. We're going to talk just like we do on this stuff every week, hit on whatever's happening that week, state of the market. We've got a couple individual presentations. We're going to talk about the future, what the future looks like, think about risk and our perspectives. Then there's going to be a break, and then we're going to shift into a really unique institutional lens into the marketplace. I think this is going to develop a bit more from where it's at right now as we're in conversations with several people. But we're going to have James Lavish there to talk about macro, and he represents the BTC Opportunity Fund. We're going to get into digital credit and beyond, and like where this industry is going. We've got a representative from Barclays there that's been involved in several of the securities that have been issued in the market. So he's got just such a unique perspective that it's hard to understand what's going on until you talk to some of these bankers. This next one is going to be, where's the Bitcoin Lebowski? We're talking about trading and custody. How does this stuff work? Like, is the Bitcoin real, right? How does the trading environment work where you actually go out, you take these dollars, you go into the market, you buy the Bitcoin. Where does it go? How does the custody work? What does the behind the scenes transaction look like? Just to explain the complexity, because a lot of people think this stuff is fake, but it is so incredibly complex. And we've got somebody from Anchorage Digital coming to talk about the specifics within the marketplace. Then we're going to get into what's it like buying $500 million of Bitcoin, a CIO's view of the world. We've got Ben Workman, CIO of Strive, also member of True North, and then Matt Hogan from Bitwise, also talking about just the landscape of this market and what it's like actually buying Bitcoin. And then the bull and institutional case for amplified Bitcoin, just to get people fired up. I think this is a really big opportunity with a large landscape. And we've got a couple of people that I think you guys will be excited about coming to talk through the bull and institutional case for Bitcoin. And then also last year we had Fong Li stopped by and chatted. So we'll probably get some members of the strategy team swinging by as well. Hopefully, fingers crossed, no promises. But all of this is subject to change, but this is what we're aiming for, a really high alpha industry view from behind the scenes to give a unique perspective that, we try to bring every week. And it will only happen here.
Right. And so Jeff, how many people have signed up already?
We've got 35 tickets remaining. There's 115 people that have signed up. And paid. So
paid.
Yeah. So the tickets are available. They're in the chat. It's on the MSTR True North website. You can take a look there. It's available via Luma. Only 35 tickets left. And please come hang out. It will be a great time. We are going to have a great after party. We've got some cool giveaways that we'll have there as well for people attending. And it'll be good.
Yeah, I'm super excited. I think I'm just so impressed by what everyone at Strive has been able to pull off for this True North event. And I think it's going to be really, really special. Last year it was special, like, again, and I said this before, but the people that join at this event, we are the ones putting it on and kind of leading the discussion. But people come to this event with much more experience than any of us in capital markets, in different businesses, so on and so forth. So you go to network with these, highfalutin people, and it's quite an amazing experience. So I recommend joining.
Yeah, you'll rub shoulders with very interesting people, which is a great experience. I mean, once I went to my first Bitcoin event, my conviction just elevated drastically when you're actually talking to the people that are working behind the scenes. And it's really kind of funny because several of the people that I work with day to day have no clue what's happening on X. Like, they can't even access X on their computers. But yet they're still working in the crypto environment. They're still working in Bitcoin. They're still operating behind the scenes, legal environment, banking environment, et cetera. And like are unaware of what's happening here, but they're spending all of their life's energy working on this stuff. So yeah, please join. Come hang out. Will be a good time. All right. Switch gears. Shall we talk about debt, leverage, capital structures? Everybody on the internet thinks that strategy is going to get margin called, which is just continuously hilarious, given that they haven't done a lick of research. So let's talk about it.
You know, when people say that margin call, I don't think they know what margin call means. They just don't. Look, if you go back to the 2008, 2009 housing financial crisis, those people that levered on their houses, they did not get margin called. What happened with them is that they took out, if you go watch the movie The Big Short, right, about Michael Burry, what happened was when those loans reset, right, and the interest rates went up, those people couldn't pay the loans at all. Right. And what's different with strategies, they have $2.25 billion sitting in cash, right? Which is good for whatever 30 months of making payments. And like, look, if there's a bear market in Bitcoin for the next 4 years, you know, complaining about Michael Saylor is probably like the worst thing because he's the guy that acquired 700,000 Bitcoins. Right. So I don't get the logic. And from this perspective, you know, he has the most liquid asset ever. And I say this to people all the time. What's the best feature about Bitcoin? You could buy $1 billion of it over the weekend.
Liquidity.
What's the worst feature about Bitcoin? You could sell $1 billion of it over the weekend, you know, in minutes. And so you tend to see these dumps on Sunday, and people get demoralized when it opens on a Monday. So let's go through the numbers. But
yeah, I think you hit the nail on the head, right? Like you don't like the capital structure does not have margin calls. Period. Like the strategy capital structure does not have margin calls. It doesn't exist. These are senior unsecured, like the debt that they have on their balance sheet is senior unsecured. Let's go through the statistics. We'll talk about it. We'll do 101. We'll go through capital structure. We'll talk about the debt. We'll talk about the preferred instruments, and we'll talk about like what are the options here and you know how to think through this. So first of all, we show this every week. This is MSTR financial leverage looking over time. I've got the comparison this week against 11, 15, 22. So you guys can see like really how different this entire situation is compared to where they were back in deep bear market territory in November of 2022. So this column BX is as of today. So 713,000 Bitcoin. I think the price of Bitcoin has dropped to 71,000 here since then. Let's just do it. Let's just update it. 71,000. Okay. MSTR price $124. So they've got $50 billion of assets, 50.6. USD reserve, 2.25 billion, 8.2 billion of debt, 8.3 billion of preferred. So the net capital that they're holding on the balance sheet in USD terms is 44.6 billion. The annual preferred obligation is 888 million. So they have 53 years of dividend that they could pay with the net capital held on their balance sheet, assuming that they sold the Bitcoin and they paid off the debt as of today, which they do not have to do. So it's just a conservative perspective. So their debt to asset leverage ratio, their leverage ratio is 11.8%. Again, Mike, you bring this up all the time. When anybody goes to put 20% down on a home, you are 500% leveraged on that house. That house can light on fire. Like a lot of things can happen and you're 500% leveraged on the house. This company is 11% leveraged on debt. Very different place. The coverage multiple on the balance sheet is 3.1. And then including the preferred equity, which again, the notional value of the equity never has to get paid back. The total amplification is 31%. So the Bitcoin price needed for the assets to be worth less than the debt is $11,197, which is another 84% drawdown from where we're at. This next column shows a 50% drawdown from where we're at, getting down to 35,000. I personally think that's unlikely, but you know, I think it's helpful to look at the perspective here. Even in that scenario, the leverage ratio on the balance sheet would be 23%, and the debt plus preferred total amplification ratio would be 60%. Okay, so how does that compare to November of 22? The leverage ratio in November 22 was 130%. The debt plus preferred total amplification was 130%. When everybody was losing their heads in November of 22, yeah, maybe that actually was a little bit of a better time to be losing your head about the future of this company. The future of this company was far more uncertain back in November of 22 when they had $2 billion of balance sheet assets and $2.7 billion of debt. A complete, like, granted, that debt had a long term. It was convertible debt. They had some term debt, and they had to power through the price of Bitcoin going back up in order to get to the position that they're in today. But you look at the health of this balance sheet, right? Even if the price of Bitcoin went down another 50%, I would say this balance sheet still looks incredibly healthy compared to my past life working in the insurance world, where companies like insurance companies would have their premium to surplus ratio would be 3-to-1. So that means they would take in 3 times the amount of premium in the door than they had surplus on the balance sheet. So that, let's say you had $3 billion of premium and you'd have a $1 billion of surplus. Now that $3 billion of premium, you might have $10 billion of liability risk on the balance sheet. And these corporate vehicles are only making like 6 to 8% returns a year.
Wait, Jeff. Okay, I understand your math. You're bringing in $3 for every $1 billion that you have in your balance sheet. What do they do with the other money? And if they only make 6% a year, just pay out claims?
They're paying out claims with premiums that are coming in the door.
Oh, okay, got it. Okay,
Yeah. So
90. So if you make a 6% net, 94% of what you're bringing in is just going out for claims.
Yeah, they've got like reserves and they hold the float, right? So you've got
Right.
like the $3 billion. The surplus is like surplus, the extra that they're holding there. But the balance sheet returns are not fantastic.
So okay, so I've never seen this. Wait, you showed this before, right? Yes.
Yeah. I've talked
Okay.
before. Yeah.
Sure. So if you look at column E, row 9, right? So I understand they had $2 billion of BTC assets in millions, and then as of today they had 50 billion. Rough math, because this is what the clowns always say. Oh, strategy is only made. Let's say they're negative on that.
They're negative on their balance.
Yeah, they're negative on the balance sheet. Meanwhile, they 25x their balance sheet, right? They 25x it because 2 times 25 is 50, right? So they 25x the balance sheet. The debt to asset ratio dropped by more than 10x. It's now 1/10 the size, right? It went from 130% down to about 12%. So it's now 1/10. So they delevered it. This is what everybody said. Oh, Saylor's levered up. He's got massive leverage. No, in a notional amount, you may say he's got whatever $8 billion in debt and $8 billion in preferred stock, but his leverage ratio is only 11.8%. And even if the price of Bitcoin gets cut in half, it goes to 23%. And 23% is approximately 1/6 of the 130%. Did I get that all right?
Yeah.
Right? Because 6 times 23 will get you right about there. Sorry, 5. Yeah, no, more like 5 times. So with that said, they're in better shape right now. I think the biggest problem that we have is that people, who are the people? There are accounts that have 500,000 followers, 800,000, 1 million followers, or 100,000 followers that can't do a table like this from first principles, that say stuff that is factually untrue. And what we call that is FUD, fear, uncertainty, and doubt. I don't know why they do it. Probably because they don't like the guy that has increased his market cap by 25x since 2022. And if you were to start that with a company, what was their market cap, prior
in 22?
to? No, in 2020.
Oh, it was like $1 billion. $1 billion.
$1 billion. So they've done 50x. So I would tell anybody watching this, if you have 50x your net worth in 5 years, you're probably okay. Probably, right? I mean, unless you start with $1, right? So I think that's the big thing. That they 50x their market cap since the start.
Yeah. Yeah, and there's people in the chat right now that they're complaining about the share price and the ATM. And like, you can complain about that, and the balance sheet has accreted value. There is more Bitcoin per share now than there was back then. Like you have more exposure. Like 1x mNAV is going up and it's rising into the future, right? There's a point in time, there's an inflection point in time where Bitcoin moves fast, right? Bitcoin is going to move incredibly fast, like it does, right? It makes most of its gains in 10 days. And so we've seen this multiple times in the past. Bitcoin went from what, $30,000 to $100,000 in like 50 days. Strategy at that point went from $100 to $543 in 50 days. Go back even further. All right, 2024 strategy went from $250 to $2,000 in like 30 days. And like that, those are the opportunities that this kind of convexity can provide. Like they are building this balance sheet and they're cranking it tighter, getting the preferred equity, taking long-term perpetual liabilities. And as that balance sheet begins to turn the other way, this thing can be incredibly explosive. Like we haven't seen the pref business model in a bull market. We've seen what the convertible bond business model can do in a bull market. What does the pref business model look like in a bull market, where they have 6 different instruments that all have ATMs on top of them, where as the price of Bitcoin rises, the relative risk profile of all the preferred stocks start decreasing, and they can be selling shares of the preferred instruments without even potentially touching the common. I'm sure that they will, but theoretically you could do that without even touching the common and just use the common to pay dividends, and this thing could get incredibly explosive. And that's what they've built here. They've built this incredible engine, and they've got the balance sheet stability with the USD reserve as well, the ability to pay dividends for 2 years into the future, 2.5 years into the future. It quells a lot of the FUD and the concerns in the market. But people are still going to yell because they don't get it, which is
Look,
fine.
I mean, also Saylor said it on a recent interview too. It's like, just because if you buy a stock and it was overvalued at the time or the price goes down, it doesn't mean it's a bad stock or the capital structure is messed up. I mean, clearly the market was going to take it to 1 mNAV. You know, look, everything's clear in hindsight, but the market took it to book value, and I don't think the ATM ultimately took it to book value any quicker than it was going to. There was hedging mechanisms in the market, lots of short pressure, like it was going to book value. Now here we are at book value with 30% leverage. I like to trade. I think Bitcoin's going to pull a 5x or so. What is it? We got a 7x to 500K Bitcoin based on MSTR's current just amplification. If it continues to trade at book value, you know, you'd get roughly a 10.5x if MSTR just stays at book value. So, I mean, that's a beautiful thing. This is the time to enter for sure. And I remember I was talking to Mason a little bit about this. It's like, now are the times when it's like, okay, what are the lessons I learned last cycle? What are the lessons I learned in the pits of the bear last time in 2022? You know, what were the macro indicators and what were the undervalued kind of equities across the board? And obviously MSTR was undervalued. Like, were there calls I wish I had bought? Did I even know what a call option was back then? Could I have created a put spread? Could I have sold some puts to make maybe a better entry, right? You can sell puts to enter here if you're buying, you know, maybe make a little bit extra cash. There's a lot of things you can do here. I think it's just important not to get emotional.
Yeah, I mean, they raised so much capital in such a short period of time in 2024 and 2025. I mean, they've got 700,000 Bitcoin. Look, in 22, they had 130,000 Bitcoin. Right, that's crazy. To your point, Dan. Right, if Bitcoin does a 5x, let's just do the math here. You're talking, not going to 0. Let's not do that. Let's do 71,000 times 5. You're talking about a balance sheet. The assets on the balance sheet are worth 250 billion if Bitcoin does a 5x.
Yeah, and I think these things will take time, but
it's crazy.
That's something we're looking at, right? And I don't know. It'd be interesting to see what software does for the rest of the year. Like Jensen might have put a floor in software, coming out and saying, you know, software shouldn't be this oversold. But I think I'm really looking forward to the day when Bitcoin starts to trade a little bit more like a risk-off asset, and it's going to take time. But I think this was a critical year with kind of the OGs selling out of the asset class. But over time, I mean, this thing, like if you look at the gold chart is really remarkable because it's pretty much just like up and then stagnates for like a very long time. And that's the benefit of having a non-cash flowing asset. And then Saylor talks about that as being the benefit of Bitcoin a lot of times too. And so, it's still an immature asset class.
Yeah, Jeff, what you said about we went from convertible bonds to the preferred strategy, and we've never seen what that can do in a bull market. And it reminded me of something that Tony Seba said. He did a really good series called The Great Transformation. And one of the things that he said that really stuck with me was that a butterfly is not a caterpillar with wings. It has to cocoon, and when it comes out, it's a completely different creature. And I think that's what's happening to strategy right now. It used to be built on this convertible bond model, and now it's metamorphosizing into something completely different. And when this next bull market comes, we'll see what the butterfly looks like.
Absolutely. And we talk about this a lot at our company internally about the fickleness of capital markets. And when a door to raise capital is open, you don't just like walk through the door. You kick the door open and you go get it. Right? And you have to do it because that window can close on a dime. And so, I mean, you think back to what's happened in 24 and 25 and like how this marketplace works. They capitalized on that opportunity in 24 and 25, and they're now sitting in this position that they're in, right? They've got a 30% leveraged balance sheet because they kicked the door open. And if they wouldn't have done that, maybe the price of the stock would have gone to $5,000 and then came back down to 20. Right? An MSTR price of $17 where it was in 2022. If they wouldn't have had everything in place and worked to build all these, tools and things, and to harness that capital and to be able to accept that capital, I think we'd be in a completely different scenario with a riskier balance sheet. I mean, this balance sheet is completely de-risked. And the interesting thing that I've been thinking about too is that we've got a lot of uncertainty with the Clarity Act. And it seems like everybody's been a little bit away from crypto because the Clarity Act is kind of floating through Congress, unsure if it's going to get approved. And there's some back and forth between Coinbase and, these other constituents. But then you look at what Strategy's done and it doesn't matter. Like the Clarity Act doesn't really matter. Like, would it be a tailwind potentially? Sure. But they've integrated these products with the traditional financial system. And it doesn't really matter what happens there or not. Like, these are institutional grade products that people can buy, institutions can buy, regardless of whether or not anything happens with the Clarity Act, which I think is another important part to like conceptualize and contextualize here with these things.
Yeah,
Hey,
Bitcoin-
hold on a second. I don't know if you guys ever hear of a company called Fidelity? They have a brokerage company.
Yes,
familiar.
I've heard of Fidelity.
Yeah, brokerage maybe people have heard of it. It's kind of interesting that they just launched a stable coin and it's called FIDD. Now, it would have been kind of funny if they would have named it FUDD, called it FUD, but with that, the fact that a brokerage house, and Fidelity was very early, they accepted Bitcoin and this may be unknown to the people that are new to this, but even back in 2017, what they said was, Abigail Johnson, who was running Fidelity, they started mining Bitcoin to see how it worked prior to 2017, and they accepted Bitcoin in the corporate cafeteria going back prior to 2017, just to see how this whole thing works. So the fact that a major brokerage house has launched a stable coin, they're not going to launch a stable coin if they're not eventually going to be able to pay, interest on that to the people that buy the stable coins. That's why they probably want the Clarity Act also. So I think you're going to see a proliferation of stable coins, and they will pay some form of yield to the people that buy those stable coins. Right now, that violates the Howey test, which is makes it a security, so they can't pay that. But once the Clarity Act gets passed and they allow to do that, you're going to see a mad rush for stable coins. Now they're going to have to back those stable coins with something. It's probably going to be U.S. Treasuries, maybe some Bitcoin, maybe some gold, right? maybe STRC. I don't know. Does anybody know a company that's doing that?
Right.
And so, right. And so I just see that the marketplace is going to change really fast. I'll tell you the last thing that I'd want to be right now. If I was the CEO of a SaaS business, software as a service, it's not that your software as a service business is going to go away in the next 6 months or the next 2-3 years, right? Because of AI. What it is that if you have a premium service on that SaaS business and you're paying $500 a seat or $250 a seat per month, and you're a CIO and you're like, wait a second, we're paying all this money. You know what? Maybe we'll ratchet some of the people down to the basic service. And what we'll do is we'll build some in-house advanced layer, and we'll keep this, not getting rid of the whole thing, just saying, you know what? It's the perception that we don't necessarily need as much SaaS services going forward. And that's the difference between everybody, oh, the SaaS business, they're going out of business tomorrow. No, you're going to keep it, but you're going to right size your subscriptions. And what you're going to do when you negotiate those contracts, people, what do you do if you're a CIO and you're negotiating the contract? You say to them, well, you know, this AI thing is we're building part of this internally. Even, let me tell you something, even if that's BS, they still say it. So they say it to their salesman that's at the SaaS company. Oh, we're going to build this internally using Claude or whatever we're going to use to build it on, right? They have no intention of doing that. They'll just say that as a negotiating tactic. The salesman goes back to say, dude, they're thinking about doing this in-house. We got to give them a price concession. That's the reason why you're seeing the SaaS companies come down and be re-rated, not because they're all of a sudden going to go out of business in 2 years, is that the threat to reducing what you're paying to them is causing them to be re-rated. And that's a simple way to look at this. Does that make sense?
Oh yeah, 100% cash flow. The cash flow is threatened.
The cash flow is threatened, and they're income statement driven companies. Now you got this bot AJ that's in the comments. Look, Bitcoin treasury companies, they're all balance sheet companies. They're based on FASB fair value accounting and CAMT. And as soon as somebody says, we got to look at the cash flows, you know what, guys? That's not the way these companies were built. They're built on the balance sheet, not the income statement.
Yeah. Yeah.
My rant's over.
100%. 100%. Let's talk about balance sheets because I like that. Let me share my screen again. And let's go to this one. Somebody asked how many of these Bitcoin treasury companies are going to be around. And I had a theoretical construct I wanted to walk through here. So let's think about this a little bit. All right, this is the top 100 Bitcoin treasury companies. I think it's helpful to think about the entire landscape. And some people are in the comments are saying Metaplanet's not going to be around. They're like 11%. They have 11% amplification from a pref only model. So like I think they're doing just fine. They're in a great position. So just think about the scale here. You've got Strategy with 713,000 Bitcoin, and then you have all of these other companies. The total of the top 100 is 1.13 million. Okay. So Strategy, if you pull Strategy out, the net of the top 100 companies is 419,000 Bitcoin. If you even assumed that 5% of these companies went out of business, or 5% of the Bitcoin associated with these companies went out of business, which I think is like incredibly extreme and very low likelihood, you're talking 21,000 Bitcoin. I think Strategy bought 21,000 Bitcoin in the last 2 weeks with the price at 90K. Right? What do we have? In the last 3 weeks. Yeah, 24,000 Bitcoin in the last 3 weeks with the price at 90K. So I people give me a lot of shit like, why do I focus on Strategy? Well, you got to know what the leader's doing, because the leader has a pretty big impact on what happens in the entire industry, because literally all of the other top 100 don't make up, they're a little bit more than half of what Strategy's entire holdings are of all of the companies across the entire globe that are publicly traded also holding Bitcoin. So we've got to know the health and the stability of number one, because it is a big indicator of what's going on in the marketplace.
And asking the question, how many of these companies are going to go out of business, like compared to what? Companies that don't have any Bitcoin?
Right.
If I had to ask myself if a regular person was more or less likely to go bankrupt, and you asked me, hey, one of them is a Bitcoiner, I'm like, he's not the one that's going out of business.
Yeah. Right. Right. He's got a long-term view of money and how the world works. Okay.
Exactly.
So let's think about capital structure here, because debt has come up. There's been some concerns, at least like Wall Street Journal's come out and talked about the debt, and you see a couple of these people talk about what's going on in the balance sheet. So let's talk about the debt on the balance sheet. So Strategy has both convertible debt and the preferred equity. So they've got these two tabs on the website, debt and credit, and you can look at all of the individual debt instruments here, different convertible bonds with different expirations. Over here, the final column on the right-hand side, you see conversion price. So conversion price of $183, 672. You see that all of these converts are technically out of the money. Basically, the conversion price is higher than the current trading price of the stock. So that would be a little bit of a concern if you're holding this instrument with like no other opportunity, right? Like if the balance sheet was small and the conversion price is out of the money, you would be a little bit concerned. However, what we just rolled through is that the company is sitting on $45 billion of net capital, even if you subtract out the debt. So they've got significant coverage over and above the debt sitting on the balance sheet. Let's look at it. 8.5 times more capital than the entire debt stack on their balance sheet. That's pretty safe, right? Mike, you want to talk about like you've got 850% coverage, right? Compared to, again, thinking about buying a house and having 500% leverage. It's like the complete opposite, right?
So that's the problem. People
don't get that.
They cannot understand this at all, because they look at this and so this is debt. The converts are debt and digital credit is debt. And that's why they're not in, if you look under shares, that's why it's not counted in the shares over here. Well, the converts are there, but not the prefs, right?
That's correct.
Right, but they're legally two different spots here, but those haven't converted yet, but they still account for it here. So my point about this is that because the metrics are so reversed or inverted, because they're so good, people just cannot understand this. They just can't. And as soon as I say this to somebody, with the house analogy or something else, they're like, oh, look, the simple numbers that let's say the company had $1 billion market cap before they started buying Bitcoin, and now they're worth 50 billion. They've done a 50x return in 5 years, right?
Yeah.
And that's to say, if you started with 100 grand, you'd be worth $5 million, right? Now, if somebody's like, oh, I only have $1. Well, your problem, you just didn't have enough money, or your nominal amounts were too low. So I think that this is the difference here, and they just cannot understand this. The other point was that Strategy made a point out of saying, go back to the previous one on the credit. So here they made a point to say that the total pref notional amount is greater for the prefs versus the total debt, and they tweeted about that. So when somebody says something publicly, there's two things. Take it at face value. It must be important that they said it, right? Because they said it. And two, what's the second order effect? And what happens is that they started off with the converts. And once they figured out how to do the prefs, that changed things. Because if you never have a maturity date, that's the key part. There's no refinance risk with this.
Yeah.
And so people cannot understand the perpetual nature of it. I get it. Doesn't make sense. You know what people don't understand also is the finality of Bitcoin. Saylor uses a metric. He said this on the Jordan Peterson interview. He said, well, gold's growing at 2% a year. So that means, after 36 years, basically the supply is doubled. And Jordan Peterson's like, what? That's called the rule of 72. And why did he pick 36? Because the math is easy. 2 times 36 is 72. And that is the rate per cycle that it takes for something to double or to halve. So I use that metric the reverse way. If the M2 and CPI is growing at 7.2% a year, after 10 years, your buying power is cut in half. It works in both directions. And so he says this all the time. So again, people just, they never think about how these metrics work. And if somebody wants to know what the technical term for this, it's called applied mathematics. It's not computational math. Computational math is Excel spreadsheet, doing derivatives and addition, subtraction, so forth. That's computational math. Applied math is to say, oh, how does this math work in the real world? And that's where things become kind of weird. And that's why when they post this and I say stuff to people, they're like, Mike, why is it a big deal that Bitcoin per share goes up? I'm like, because that shows that it's not being diluted, it's more concentrated.
Yeah.
And they're like, I don't understand what you just said. I'm like, I
accreted.
can't, it's accretive. I don't know how any slower that I can go, or the rule of 72. Now, the interesting part is they don't teach the rule of 72 in school, because that's like back in the old days, even before me, because they taught a lot of mental math. And then what happened is they changed the way they do it. Oh, let's teach people how to use calculus. I want to tell you something. I've never had to use calculus after I graduated college. Never once.
Ooh, I've used calculus, but I'm a nerd.
bet you have.
Yeah, like I do it for fun on the
I
weekend.
use calculus to calculate the area under my MSTR share price over the last year.
Oh, banger calculus joke. Okay, I want to come back to this this capital structure for a moment, because the reality about this capital structure, everybody's losing their marbles. But the reality is nothing happens with this debt for another 20 months. The first put date on the first convert is September 15th of 2027. So they have 20 months to figure out what, like, if the price is still below the conversion price, Strategy has to pay back the $1 billion of notional debt by September 15th of 2027. Okay. So you got 20 months.
I want to make a minor clarification there. And I think this applies to all the to all the converts. I believe that they could pay back as either all stock, all cash, or a combination of the two.
Yeah, I need to confirm that, but it's definitely
it's usually I believe it's all three. So let's say the price was 160, they would say, "Oh, I'm going to give you the shares and make up the difference in cash," because there's usually like a 40% uplift in addition to whatever the coupon was that's listed there. So, but I believe that's the case for almost all of them. Somebody could fact check me.
Yeah, we'll have to double check that. We'll
Sure.
get the AIs working on it. Anybody in the stream want to work through that? The 8K is from September 20th. Check it out. It's got all the terms. You could go read all of that stuff and plug it into AI and pull it out. I think you might be right there. But even if, okay, so the reason I brought this up is because they've got 20 months to figure out what to do with the first one. The next one comes due. What is this? The put date is June of 2028. So they've got another, what is that? 9 months to figure out how to get the next 3 billion.
So I was saying this before. So look, this one's at 672. And this is something on whatever the stock is, 50 vol, 70 vol, whatever it says on the website. If you look at MSTR right now. So what that means is if you want to make sure that you're deep in the money, you want to have the stock price more like 800, 900, $1,000 to account for the volatility when you get close to that 672 number. Somebody's like, oh, well, we'll just do 673 and we're all in the clear. No, it's a 50 vol stock. So you would want the price to be like $900 because you want to account for the price fluctuations on a monthly basis and daily basis.
Right. And I was wrong here. You've got the put date here. You've got 3/1/2028 on the 2030B, and then you've got 6/1/2028 on the convert 2029. So those put dates come due in 2028. So we're talking, 25, 26 months from now. And there's multiple ways you could do this. You can also think about what we just did at Strive, right? We inherited Semler, or we acquired Semler. We inherited their convertible debt, and we did a secondary offering of our perpetual preferred equity, and we exchanged convertible debt for perpetual preferred equity. And we were able to retire 90% of the convertible debt in exchange for perpetual preferred equity. That's
Yeah,
interesting.
I was wondering when they
Wait,
were going
so-
to start copy trading you on that one.
Yeah. So
We're blazing the trail along with each other. Yeah.
So Jeff, I know that you work at the company.
Yeah.
Was that hard to do? Like, did they agree that, I mean, has that been done before? I don't know. Whatever you're allowed to say.
Yeah, I think there's been negotiate, like everything's a negotiation. Like these are big financial deals, and like the companies that hold this stuff, they don't want the company to go out of business, right? They bought this product to make money. And so if they're holding this product and they're still kind of long the company, like the worst case scenario is that the company goes completely out of business. If you're holding a convert and you hold short positions, like best case scenario is that, it converts, it goes into the money, you make a ton of money on the upside, and you got to hold this downside protection. But I mean, thinking about the strength of the balance sheet, I think you could definitely strike a deal. Thinking about strategy, they could strike a deal for converting some of this into perpetual preferred equity. Now, may they like the terms? I don't know. Like the terms and the negotiation on that front is tricky, right? So maybe they don't want to sell STRC or STRK at a discount. It kind of depends on market conditions, market terms, what else is available. Maybe it makes more sense to go issue more convertible debt with a farther out maturity and go retire some of this stuff. Maybe it makes sense to just use the USD reserve and buy it back in the open market. Like all of these instruments also trade in the open market. So right now, if you think about where they were issued and where they're trading now, they might be at a discount to where they were issued, and they could have the ability to buy these things back in the open market as well. And considering they're sitting on a $2.25 billion USD reserve, that's another lever that they have that they can pull to do these things. So there's so many things. The optionality is huge here with this balance sheet.
So I modeled that a while back, and that's kind of like, for instance, think about it on the flip side. Let's say you're the 2028 holder, and the conversion price is 183, correct? Right. If you were to say to that holder, hey, look, I'll make you whole at 183 and convert you now. Right. I'll do shares. They got the cash, and split that out into a combination of prefs and MSTR shares. If you were to make that offer to them, the question is, do they want to do that, or do they want to play that delta hedge game? I think that's an interesting concept. And by the way, you notice on maturity on below that column, it says 4.1 years.
Mm-hmm.
It's kind of, was that always there? Because that's a countdown timer.
Yeah, I think that might be new. I saw that for the first time today as well. It's like a blended.
Oh, it is. I didn't know if that was new. I think that's a countdown timer. And I think what's going to happen is, I do think it's kind of odd that they did the 2030B, which was in 2025. They did one that's the last one that they launched, I think, because it was the last one before the prefs. I think in their view is, and the fact that it was, I think they want to get rid of these sooner rather than later for a variety of reasons.
Well, they've said they want to do that. I'm sure they'll talk about it tomorrow on the earnings call.
So can we switch to that now? What do we think they're going to say in the earnings call tomorrow?
What kind of surprises are we going to get?
Yeah, we could talk about that. Yeah, let's hit it.
That would be a good surprise, though, if they announced that they were converting one of these over,
I guess
some kind of raise.
What I wanted to get by here is that they had the optionality and flexibility, and they're in no rush. There is zero rush. There's zero margin call. There's zero, they don't have to post collateral. These are all unsecured debt obligations. And they have so much optionality because they have the Bitcoin on the balance sheet, because they have all these other products. All the other products are liquid. And Mike, to answer your question a little bit further, it was pretty fascinating to me when we were having some conversations on our transaction. Some of the buyers that were interested in our products were convertible desks, because the convertible desks are the ones that kind of handle these strange or odd instruments that are like perpetual preferreds, or they're considered like more atypical from the market. And that was a pretty fascinating discovery for me. Like it wasn't like I was talking to, specific pension fund managers that understood the risk profile of these things. We're still talking to like niche money managers that are interested in like high yield, strange products that are new to the market. And that's kind of just where this landscape is at. Like it's trickling into a more mature world, but these are unrated instruments paying high yield where people don't understand the risk profile of these things. And you think about the coupons here. The people that are holding these instruments are making money on the volatility, like delta hedging consistently. And so you look at like the 2028 convert, the coupon payable here is 0.625%. If you come to them and you say, hey, can we convert this into my perpetual preferred stretch instrument with $100 million of liquidity every day that pays you 11 and a quarter?
Yeah, but to be precise, there was a 30 or 40% uplift also combined. The coupon is correct. That shows there is correct, but they were like if the stock was at $100, he agrees to pay you $140 plus the coupon.
Yeah. No, I get that.
Yeah, but your point is still correct.
Yeah.
So look, I asked AI all about this, and I got what I got. This is why what you're saying is interesting. Was the response that I got back from multiple questions about this is that the convert buyers, right, conversion bond buyers or convertible equity buyers, like the delta hedge. They're used to it, and they may be mandated to be in that type of space as their own rules. But what you're telling me is they may be more flexible than what AI knows. Is that about right?
Sorry, say that again.
Are they more flexible? If a guy's in a convert, he would say, okay, great. What you're saying is, hey, if I'm in a convert now that pays not even 1%, and I'm going to switch you to a pref that pays 11% or pays 8%, you're saying that they would be enticed to switch.
Yeah, potentially. It's just
okay.
It's like it's a pretty good value proposition, right? Like, think if you're on the other side of that trade, you're like, okay, I have this product where I got to do a lot of work, right? You got to
Right.
do the work of delta hedging, or I have this product where I get paid 11 and a quarter. And like one of the comments here is that you sell it at a discount to par. Obviously, there's hedging that can happen from like where the instrument is sold at a discount. We saw this with all of the IPOs. All of the perpetual preferred IPOs were sold at a discount. There were people that were buying into the IPOs and selling it as it got to par. But the really interesting thing here, and thinking through that, like the mindset of that buyer, is that the downside is like with a company, you think about Strategy's capital structure, with a company that's got 2.5 years of capital of USD reserve, and you're probably going to get paid your dividend for at least 2.5 years, assuming zero additional capital is raised. Your incentive to exit that position, like you're just in no rush. Like even if you're hedging and arbing the discount, you're in no rush. Like you can hold that, like if worst case scenario, you hold that position and you get paid the interest rate that's like over and above everything else in the market by 3x or 2x, whatever. It's just an interesting value proposition. It's a good product. Like the prefs are a good product. And I think they fit a really interesting buyer. The other thing, Mike, to your point with all of these things is liquidity. I'm sure most of the people watching this call don't have like a Bloomberg, but if you have a Bloomberg, you could go see that like these convertible bonds don't trade very much. And if they trade in size, like $45 million will trade hands, $50 million will trade hands. And the alternative is like, okay, if I exchange this like incredibly illiquid thing, the convert, to the pref that is liquid, trades every day the market's open and Stretch trades $100 million a day. All the other instruments combined is like 150. That's an interesting value proposition in a negotiation. So I'm not saying that they're going to do this. They might. It's just an option that they have on the horizon, and they've got so many things that they could do from here until 2027 before they even have to make a decision. Meanwhile, everybody and their mother, their heads are exploding because they're worried that strategy is going to have to sell some Bitcoin.
Yeah, and to Voyager's point in the chat, I mean, could they just cover these with the reserves?
I mean, you look at the notional; they've got 8.2 notional. Like they could cover 2.25 with the reserves.
Yeah, and then so this whole thing is almost just like 6 green dots on the chart.
Yeah, not even 3.
Done. Oh,
and Jeff, so if they did this, so let's assume just for argument's sake, they raise enough cash and they retire all of these, right? So it's $8 billion, right? Go back to the other one where it says credit.
Yeah.
Right. So it would be $8.2 billion. So they sell the stock to do it. So the shares, right? The shares per Bitcoin, Bitcoin per share would drop, right? Because they raised cash, but then they would have no converts. So my take, if they raised $6 billion in cash, what would that do for their debt? The debt would be gone.
Yeah.
Right. So in your formula that you did on your Excel spreadsheet to start,
leverage goes to zero.
The leverage goes to zero. Okay. So
leverage
am I missing anything?
No, I mean, look, the last earnings call, they talked about this. The target goal is by 2029 that they have a zero leverage balance sheet and perpetual preferred only model.
So is there any reason for them to accelerate this and pay this off in half the amount of time?
They don't have to.
They don't have to, but would it be beneficial if they did? They won't. I don't think they will.
Won't. It creates bad blood with the issuers.
Right.
Yeah, I don't know about that. I mean, based on some of the conversations I've had, like I don't know if that risk is as big as I mean, maybe it's there, but I don't think
I've heard that there's pretty much zero world in which they pay these off early, but
probably not. I mean, the rational thing is wait, because they don't have to do anything.
So what do you think is going to be the biggest surprise for tomorrow?
I have no idea. I mean, Saylor's been pretty quiet last couple of weeks. I mean, I haven't seen him on too many things, or since he's dropped the bombshell on Danny Knowles. I think he's been relatively quiet. So I don't know. I think they've been cooking on something.
I'll come out with
go into defense mode. Like you're probably fighting off every institutional investor who's like pissed at you. Like it takes a lot of courage, a lot of conviction to like stand strong here. So,
but by the way, I got to take a pot shot. You guys ever hear this guy Jim Cramer?
Who's that?
Yeah. Anyway, so he's some bald dude. He said today, Saylor should do a big convert and stabilize the whole market. Dude, really? I mean, that's the level that you're at, because we know about the delta hedging. That's not what he wants to do. And I don't know how after a while, you're like, do you put any effort into understanding a balance sheet company? I don't know.
Yeah.
I thought oh, go ahead.
Go ahead, Sully.
I was going to say, I thought they were going to come out with at least one more preferred before end of 2025. So maybe another preferred. I guess they need an iPhone for Europe, right? They already got STRE. So they need an STRC for Europe.
But they said Canada. They said Canada and Europe.
Yeah.
So we got STRE. So I think the more interest. Look, I don't know what they're going to do. What I can tell you, what I think they are going to do is I think they're going to. When you look at the statements that come out when they buy Bitcoin, they always make a change. They always show you how much is left on the ATM for each line item. And so from that perspective, I think they're going to provide. I think they're going to issue a look. This is what I can tell you. They're going to issue a 2026 plan. I don't know what it is. The 2026, right? Here's their targets and metrics how they're going to judge themselves. BTC yield is the amount of Bitcoin per share. They'll probably pick a number for that. I don't think they're going to put a target. They represent that as a percentage, not as a number. as an integer. So I think they're going to put up some percentages. I think the key thing when we watch this is to see what's different from what it was, what we expected. And look, I think that them raising the cash, they realize, because the cash raise happened December 1st.
Yeah, not that long ago.
It wasn't, but it happened after the October 10th Binance crash. So my view was that was them, not because they wanted to get defensive and the MSCI FUD, they chose to get, I got a yacht and going to, oh, dude, that was so, so I'll come on this. But I think the crazy part about, not the crazy part, the rational part was, hey, what happens if this thing trades sideways? Let's acquire some cash, which is what they did. You know, by the way, the fact that he showed up, I refuse to say what files they were in, but they're like, oh, we can't blackmail him because all he's interested in is driving around in his yacht and he's too much being like autistic. I'm like, no, maybe you're just a dummy and he's too smart. And you just label, I like how they label all the smart people, oh, they must be autistic. No, maybe they're too smart for you to realize what the hell they're saying.
That whole situation. I don't even want to get into it.
No,
Yeah.
we're not.
Like, I don't even want to.
So with how much that they raised with the stretch ATM that 1 week, are they going to have to announce a bigger ATM? They'll blow through that.
That's a good question. I'm
So
curious.
I think maybe an announcement for that tomorrow.
How big? How big is the stretch ATM? I don't know off the top of my head.
I'll look it up right now.
Yeah, it's less than the 8 billion on some of the other prefs. It's either 4 or 8 billion.
4 billion. 4
I
billion.
think it's 4. Yeah.
Yeah,
Right.
it's so interesting. They came out with a $20 billion, or what was it, 21 on strike, and it just like there's been just not a ton of interest in that one so far, which is pretty fascinating. Another question: will there be a Super Bowl ad? Like, what's the cost of a Super Bowl ad? It's like $15 million for 30 seconds. Will there be a Super Bowl ad? I don't know.
Stretch your money.
Stretch, like a stretch Super Bowl ad, maybe. Like,
That would be funny.
I mean,
I did see
Coinbase
a
has done
YouTube
a
short.
Super Bowl ad.
Yeah,
Yeah.
a YouTube short popped up, and they're trying to feed me something through the algorithm, and it was a stretch short, and it had Michael Saylor's face on it.
Oh, that's cool.
You know, I don't know. I don't know if he'd bother with it. It wouldn't bother me if would that be a good use of $1 million or whatever? I don't know what the 30-second ad goes for. But 15 million, how much is it for a 30?
I think it's like 15 million. Yeah.
Jesus. I don't know if that's a good use of funds, but
They have 2.25 billion making money on, and treasuries.
so it's like peanuts. By the way, did they ever say what they're going to put that cash into?
No, that's what I think they'll talk about tomorrow. Cash plan for 2026. What is the cash plan?
You know, one of the comical things I saw somebody say when they announced it was, oh, they should put the cash into STRC.
Yeah. Well, I know another instrument that they could put some cash into. No, it will be fascinating to see what they talk about there, because another thing that may come up from that is ROC dividend status. Because think about it, right? You've got 2.25 billion making 4%. Like, I don't know what the number is, but it's hundreds of millions of dollars, and that would technically be profit. So how does that change ROC dividend status? Do they care? Do institutions care? One of the things I'm most interested in watching is, like, what do the 4 institutional analysts ask tomorrow? Right? Like, Dan, I know you're going to ask a killer question, but I want to know what the TradFi.
Not to put pressure on him, but
Yeah.
dude, you're representing us. You better ask a good question.
I want to know what the 4 TradFi guys are going to say.
Yeah.
I don't know. Or what they're going to ask, right? Like, what do they care about right now? I don't know.
I think a lot of it's going to be like dispelling. I think they're likely going to try to dispel some of the nerves of their peers at the financial institutions. So they'll probably target their questions around that. Like, what happens if Bitcoin sells off and you have to meet dividend? Like, I think there's going to be one of those softballs that Saylor's going to answer the same way as always. Like, what do you do?
You don't have to make a decision for 20 fucking months.
Exactly. It's like, or we'll sell Bitcoin or we'll sell derivatives. It's a great answer to kind of a silly question, in my opinion. But I expect like a question like that to come up, I think.
Yeah.
Do you guys want me to allude to one I'm thinking about asking? We can workshop it right here.
Yeah,
I
let's
won't.
do it.
Go ahead.
Yeah,
But then ask something completely different to put them, like throw them a curveball.
I'm really interested in how the stretch yield curve. So now that stretch's yield is being moved up and down, right now it's being moved up to try to get the price up to 100. It's affecting the entire yield curve of Strategy's press.
Yeah.
And they're not really trading independently necessarily on a duration basis, right?
They're floating up with it.
Stretch. So that creates a weird dynamic where the press actually are kind of all just stretch in a weird way. And so my question is, like, how do you build out a yield curve if these are all just kind of stretch dependent preferred equities? You've set essentially a floor on the credit spread of all the other preferred equities by moving up the stretch dividend.
But isn't that a good thing?
I know, like theoretically,
you're pushing the cost of capital up on all of your instruments.
Yeah,
right. But wait, hold on a second. I'm not a bond guy, right? But on the other ones, those are fixed yield. Sorry, they're fixed. They're fixed dividends, right?
Fixed dividends.
But they're fixed dividends, whereas stretch is the only floating one.
Mm-hmm.
Right,
Yes.
Graham. But like, so if you jack up the interest rate on stretch, or you get it.
I agree.
The prices fall on the other one, so the relative yield is rising. At least that's what we've seen. Obviously, there's a ton of other market dynamics at play. But
there are, but I also think this is the main one.
Yeah,
but
the senior prefs.
Go ahead, Sully.
Yes, but if the rates do come down, won't that pump up the other prefs more than stretch?
It will.
Or will it still be more attractive? Okay.
I think that's what Dan's saying. It's like a rubber band. Like if you pull one up, it like pulls the other ones up with it too. If you pull one down, it's gonna pull the yield down with all of them. That's a great question. It's something I've been thinking about a lot too, and something I'm most fascinated with these products is that you create like a yield instrument with like so many different trading pairs where you can calculate the risk 24/7, 365. Like stuff like this hasn't existed before. Like what other bonds have this much liquidity? Like HYG has this much liquidity, which is an ETF fund of bonds. So it's like giving you yield, but it's a fund full of bonds, and there's like a cash buffer, and the company manages it. Right? It's like an ETF. But like you're creating so many different trading pairs that you can have between all of these different instruments, which is kind of what you're alluding to. Is like if the one interest rate goes up, you would sell some of the other ones to buy that. It does kind of artificially change the curve based on what the arbitrage opportunities are relative to the risk. And I guess the real question I've been trying to wrap my head around is like, does the market like, I don't know, I say this all the time, risk is mispriced. Like, how does the market view the risk of these things? Is it completely unplugged from everything else in the world? Like why are these trading like this? Why is there so much volume? Who's buying them? Who's selling them? Like, why is there 100 million of volume? Like, what did Stretch trade today? Let's look it up.
I think
168 million of volume today. That's crazy.
In my mind, it kind of comes back to this idea, and I know you guys did it at Strive, but it's like ultimately the ultimate capital structure is just a stretch sitting senior and nothing else. And I think that's what we're kind of running into with Strategy. The other products are cool, but ultimately the apex cap structure is Bitcoin and then a senior unsecured perpetual preferred monthly short duration.
Why?
Because the other products will trade relative to that interest rate.
Yeah, it's interesting.
The duration, having duration on that instrument makes it such that the interest rate on the fixed, not in a perfectly efficient market. Like you could look
they've all got different risk profiles, theoretically, right?
Yeah, but I want to make a distinction. I want to make a distinction here. The duration for all of these is perpetual. The payment schedule is either quarterly or an STRC is monthly. And I think the market would rather have a monthly payment schedule. And then with everything you're saying about these credit spreads between them is, I agree with what you're saying, Dan, is that on STRC, because it has, what do you call it? It has a variable interest yield that they could change And by the way, it's rule based upon the VWAP, the last week of the trading month, that then changes the credit spreads and all the other ones. So I think
Yeah.
from that perspective, it kind of affected those. Look, I have a 1% belief that they will change the ATMs for each of the different prefs. They could change those shelf offerings and say, given what we see here, we could change that. Or they may just leave them the way they are
I
and
don't think they'd
increase
do that.
STRC.
Yeah, I don't think they would do that.
You wouldn't change that. So STRK has got plenty of room left on it. So for
Yeah.
instance, I pulled it up and I'm looking at it right now. STRC's got 4 billion left on it. STRK has got 20 billion left. STRF is only 1.6 billion. Sorry, STRC is 3.6 billion. STRD is 4 billion. So there's only 3.6 billion left on STRC. I think that that'll be interesting. And I think they're going to give us a view on MSTR stock. There's only $8 billion left on that. I think they're going to revise all of those. They're going to revise the ones they're going to revise, but I think the big revisions are going to be in STRC and MSTR.
Yeah,
Yeah.
that makes sense.
Yeah, well, it will be interesting to see if they have any revisions on the MSTR ATM.
Are we going to have an after hours, like right after that, to give a quick talk?
I'm going to be on an airplane, so I can't. But hop on a space, do it, rip it.
Yeah.
Rip it.
Okay. Dan, I'm available tomorrow. So
Cool.
how many hours we think it's going to go tomorrow? 2 hours?
Give yourself a window.
Whenever Sam.
It's like it's scheduled for 60. It's going to go 120.
It'll be interesting to see how many people show up for the call.
Yeah, absolutely.
Yeah.
Cool. I mean, I think that's really it. I think we've hit on most of this stuff. Should we talk about other capital things happening in the market? I mean,
Yeah.
So Lay, you did a little research, or there's obviously some buzz happening in the capital raising world. You've got XAI is now a part of SpaceX, which is a fascinating development. And you think about that potentially getting rolled into Tesla. What's capital raising look like in the future? OpenAI maybe going IPO. Yeah, a lot of moving pieces here. You've been following this pretty closely. What are you thinking about? So
Yeah, I was looking at that and how it compares to what the Bitcoin Treasury companies are doing. And so there's this guy I follow named Stephen Mark Ryan from my daily Tesla hype, and he said that SpaceX was requesting to launch 1 million satellites for orbital data centers. And if they were going to fund this, they'd need like 50 or 60 billion. And they'd need to be valued at like a $2 trillion market cap in order to make that raise kind of reasonable at like a 2% of their valuation. And I went back and looked at some of Tesla's old raises. And in 2017, they raised like 5% of their market cap. 2019, 2020, they raised back-to-back years. They did a little under 2% of their valuation. And what I really started to wonder is like, how often can they get away with this stuff? Can they just raise every year, every quarter, every week, every day? And even if they could, like if shareholders had infinite tolerance for capital raise, Tesla couldn't actually do an infinite capital raise because they can only sell so many cars. They can only build so many factories. There's only going to be a certain maximum number of Cybercab rides possible. So Tesla can't really raise infinite capital because they can't put infinite capital to good use.
To work.
And so that's limiting factor number one, efficient use of capital. But what about Bitcoin treasury companies? When do they want more Bitcoin? Well, that's a trick question because they always want more Bitcoin, right? So if there's a continuous need for all people and all companies to buy Bitcoin 24/7, then there's an infinite demand for capital to buy more Bitcoin, which brings us to limiting factor number two, which is how much ATM can the market actually handle per day? If your trading volume is like a share a day, then even selling one share ATM would double the daily volume and tank the price, right? So that's where the liquidity comes in. And that's where the phrase volatility is vitality actually starts to make some freaking sense, because the bigger the average daily trading volume, the bigger the ATM a market can tolerate. And that daily capital raise can be immediately deployed to purchase an appreciating asset. So, while investors usually have to wait years to see if their gamble paid off, a company that raises capital to buy Bitcoin is not limited by how fast they can deploy the money. They still have to wait for Bitcoin number go up technology to kick in, but that's not really an issue for Bitcoiners, right? We don't care. so to bring this to a close, every company should buy Bitcoin with their income. We know that. But there are a few companies like Strategy, Strive, and Metaplanet that have market caps and liquidities to continuously raise capital to buy Bitcoin. And so the obvious name that I came up to describe that is continuous capital raise companies, or CCRCs. And I'll just pause there to see what you guys think.
Continuous capital raise companies. I mean, you bring up a bunch of really good points here, like the liquidity and the ecosystem that these companies get connected to. You think about like MSTR. I'm just looking today. Today was the 33rd largest publicly traded company. It traded $3.3 billion of stock. The enterprise mNAV on the company is what, 1.13. So they're still trading at enterprise value premium relative to the underlying Bitcoin held on the balance sheet. So, I mean, they theoretically could be in the market. And like, why does this work? Like, why? I think about this a lot. This is why I post it every single day. The liquidity is just so important because there's so many different trading pairs, very similar to what we're talking about, the credit instruments. There's so many different trading pairs. Like MSTR is part of the Bitcoin ecosystem. It's like a pure expression of the Bitcoin world. So you can operate in the derivatives market. There's incentive to operate in the derivatives market to hedge certain things because it's moving, it's like correlated, it's amplified. There's a high correlation and connection between the two. And so there's so many instruments that like the computers can go in and out of any given point of time, any time of the day, long, short, any which direction, in and out of the pref instruments, et cetera. And that provides this liquidity to be in the market and just kind of dripping out shares when you want to, when it makes sense, which is part of the whole thing.
Right. So I want to mention something else about this, which is pretty interesting, is the fact that there's options on this, and with the prefs, right? You could trade these pairs, and by not using options, you're not triggering theta decay and expiration date problems. So you typically have large gamma with short expiration dates. And so by trading with the prefs against MSTR versus against Bitcoin or versus IBIT, it gets rid of that expiration date piece. And I think that's one way to trade this also. The ecosystem is quite large now. And, I was on a space with, I don't know, a couple of days ago, and people are like, how much larger do you think is the derivatives market on Bitcoin than the value of Bitcoin? And I'm like, well, it's got to be at least 10x on the low side and 25 to 50x on the high side on the derivatives part of this. So and people ask, is that a good thing? I don't know. What I can tell you is it's inevitable. And what I can say is this, is that when you do get a supply crunch and you do want physical delivery of Bitcoin, they're not going to increase the amount of Bitcoin that can be produced. That is what we're all waiting for. That cannot be changed. Whereas with silver specifically, as the price ramps up, they can make more silver. I get that it's an industrial metal, but that can happen with silver, and they could pump up and make more silver to do this. With Bitcoin, we know at the next halving, the net new supply keeps on getting cut in half.
So, and there's the difficulty adjustment.
And the difficulty, yes.
Mm-hmm.
So that component, I've been thinking about this a lot. That component of the difficulty adjustment makes Bitcoin interesting to computers. Like that's what makes it fundamentally far more interesting to a computer than a physical asset like silver or gold. Like the difficulty adjustment is it. Like that is the biggest thing. And because like you could underwrite the risk of these. Like the computers are going to be able to compute the risk of these instruments relative to like gold or silver, and they're not going to want gold or silver because a computer can't hold gold or silver, but it could hold a digitally native asset. And you see the expansion of all of these AI bots and all these tools move so quickly. These things are going to want to hold a digitally native currency, like digital scarcity. And I saw a comment on one of the posts I made about this, and it's like, who's going to pay the taxes? And I just started laughing out loud, like giggling, right? It's like, well, what jurisdiction is the internet? Like, okay, good luck going to get the AI bot based on the internet to go pay taxes on money that you can't access. Good luck.
You
Yeah,
showed the
I
the
want to,
bots. Oh, go ahead, Mike.
I want to talk about hash rate for a second before we go on. So here's, this site is Bit Info Charts. People should use this. Can you see it?
I got it in 1 second.
Yeah, hold it up here.
Here you go.
So when you look at this, this is in linear scale, and this is the Bitcoin hash rate historical chart over the full lifetime. Now, one of the things about Bitcoin is you change it to log scale, and you look at it in log scale, and you're like, oh, the little dip that we have over here is barely representative in the hash rate. And so if you, let me back up for 1 second, we'll change it. Let me show you why it gets scary. If you look at the 1 year chart, 3 years, you see this big dip that we have over here? That was because of the big
That was a winter storm, wasn't it?
winter storms right over here. That's this big dip. But as soon as you flip this to log scale, right, then it's like that dip barely appears on a 3 year chart or skip all time. It's a rounding error. So that's where this becomes, whether it's the risk curve or production rate, whatever term you want to call this, it's been running consistently, and people can, they can model this. So I think that that's interesting. I just think this is one of the first sites that I found, previously. Here's the rich list. I talked about this on the part. Yeah. And this just goes to show you wallets. And so for the people that are listening right now, here's a little bit of hopium. Okay. And you're like, it kind of feels like, I'm doing this all on my own, and you kind of are. And that's a good thing. And let me explain why. What this shows you are the amount of wallets that have more than, 10,000 coins or 100,000 coins. And you're like, okay, now each wallet could be owned by multiple people, right? So if there's an exchange, let's say Coinbase or Fidelity, they commingle the Bitcoin. This is okay. And so there's multiple owners for one wallet, but typically that wallet will be large. On the flip side, one person can have multiple wallets, right? You could have 8 wallets, right? So it kind of both balances out. Why am I talking about this? On the bottom over here is, if you have $10,000 worth of Bitcoin, and I know it's fiat dollars, you were one of less than 3.5 million people in the world. That goes to, when I saw this in 2017, that's what made it click for me. If I believe that this is a great asset, I want to have an ownership share in that. And for me, I have an old chart. I had to use the Wayback Time Machine. But if you have 10 grand in Bitcoin as of right now, you're one of less than 3.5 million people out of 8 billion people. Right? And that's the way that I look at it. It's an ownership metric. And now if you have 100 grand, which is about equal to a little more than 1 Bitcoin, you're equal to 1 and a little bit over 500,000, right? 1 in 654,000. And now out of 8 billion people, that's not a lot. So then it gets kind of skewed when you go to the bigger wallet addresses, but usually the distribution curves are about the same. You have a few very wealthy people, and then the vast majority of people are much lower. So I think that if you have $10,000 worth of Bitcoin, you're one of 10 million people in the world. That's just a back of the envelope math. And I think that that's something awesome.
That's just a crazy statistic.
It's a crazy statistic. And I didn't make this up. That's on here. And people are like, oh, well, a bunch of rich people have the most of the Bitcoin. I'm like, well,
yeah. Oh my God.
And the way it works.
The crazy part, like in the world, right? And people, I've ran into people around the globe that are buying Bitcoin and utilizing Bitcoin. Like in Africa, for example, I've chatted with a couple of people out there, and they're doing, you can send Bitcoin over SMS text message. And like, there's all of these informal economies that exist there in Africa, like that they like hoard cash, and like they'll literally have a house full of cash. And like like if you want to go to the ATM, you like go to this house, and a lady opens the window, and she's the banker, and she's got like a house full of cash. And so there's like all of these types, and they're shifting over to Bitcoin because they've got like these, primitive phones or even smartphones, depending on where they're at, and they can move money like via SMS message, which is like a crazy innovation. And so in that society, debasement has been part of their life. And so they understand the problem very quickly, and they adopt this money and they're very interested in holding this money. And those economies kind of like work in this way. And so that's just like one example of what's happening in other places in the world. And so, I mean, if you're privileged enough to hold some of the stuff, like you could think of yourself relative to these other people in the world, a very privileged position, right? I don't think this, I think the likelihood this stuff goes to zero is off the table. And when you think about probability theory, if you wipe the probability of zero off the table, like your average skew distribution just balloons to the right, like there's a huge fat right tail. So
what I say to that, as soon as somebody says to me, well, what happens if you wake up tomorrow, Mike, and Bitcoin goes to zero? I'm like, oh, what happens if I wake up tomorrow morning, the price goes to infinity?
Bigger risk, bigger risk, much bigger risk. Yeah. Like, oh man, I said that the other day too, is like, yeah, the bigger risk here is being short this stuff and you wake up and it moves in your face.
Right.
And you don't know the bottom's in until after you've experienced it. You know, like you don't know the bottom's in until it's behind you.
Yeah, and you know, right. You know what I'll say to people? Look, the best time to invest is always yesterday. And people are like, well, why yesterday? Because it's the time value of money, right? And so I know what's going to happen. Bitcoin eventually is going to rip higher. I'm not exactly sure when. I do think it comes after the Federal Reserve. You know, whoever gets confirmed goes into that, cut interest rates in a midterm election year. So I think that we will get positive news. It will. There's always positive news that comes out. You know, we don't talk about the yen carry trade blowing up. And which one are we talking about? The one in 24, the one in 25, or the one in 26, right? We don't talk about Greenland anymore. It's like, oh, we resolved Greenland, you know? So I think that once the price goes higher, we'll have the same question come back in from people. Oh, when's it going to drop so I could buy more? I'm like, well, I guess you should buy when the price is low, and that's when nobody wants to buy. And so
it's funny. I see a couple comments in here, like market will test Sailor, which I think the market is probably doing right now as well. You think about strategy is going to come out and they're going to pay dividends. They're going to pay the dividends. They're going to pay the quarterly dividend. They're going to pay the monthly dividend, and they're going to keep doing it for months. If the price stays down here, and they're going to keep doing it for months, and they're going to do it right in everybody's face, right? These are credit instruments. They've made the commitment to pay these dividends. They have cash to pay the dividends. They have a liquid common equity. They're going to pay the dividends. And I think the likelihood that it stays extended down for a long time is, in my opinion, relatively low, but I'm always planning for the probability that it does. But you think about the entire environment, like strategy isn't the only player here. They have 3% of the network. Right? Like there are so many other people that are like, think about Tether. Right? Look at Tether's assets. The USDT just hit an all-time high. It's like $183 billion. So when that stuff gets minted, they're buying like gold, treasuries, and Bitcoin. And so Clarity Act, right? Like if stable coins get approved and we got clarity on what this looks like, now you're going to have Coinbase, USDC, and Tether USDT probably exploding. And they're going to be buying treasuries, Bitcoin, gold, all these other things. So it's not just, everybody just thinks it's strategy. Like strategy has a shitload of.
Well, I got an idea for Sailor if he's watching right now. Convince, if they're allowed to, convince Fidelity with FIDD to have them buy STRC. But Dan, that'd be competitive to what you're doing. But
just you know, it's a small portion, right? They could do a small portion. I mean, shit, Tether can do it.
Tether can, right. You know, provide, yeah, I can't see why they're not allowed to. It's different for a publicly traded company than for a stable coin. Yeah. That's why we say that MSTR is equitized Bitcoin, and a stable coin is basically, you know, it's a crypto wrapper around US treasuries and Bitcoin and gold. So it's the reverse.
Fully collateralized.
And right. So look, you want to wrap it up and cover the last thoughts?
Final thoughts. Yeah, let's hit it. Dan, you want to go first? Final thoughts? What are you thinking about? You getting ready for tomorrow's big question?
He's got to go find an iron to iron his shirt.
Grant, I got to go pick him up from the dry cleaner. Come on. I think price action's terrible. Macro outlook isn't that bad. I wish Bitcoin wasn't trading with the SaaS apocalypse. It will come out as hard money. I liked Grain's chart of the hash rate because the hash rate is the ultimate source of truth when it comes to Bitcoin's overall adoption trend. So, I mean, we had the winter storm, but things are picking back up. That brings me a lot of confidence. And finally, I think people need to really take a look, step back. I saw a post from Chris Camilla today. He's like that trader guy. And he's like, take a look at your brokerage account or your Bitcoin wallet. There's still money there. You'll be all right. And instead of just thinking like it's all gone, like you're all right. And then make the best decisions you can moving forward.
Yeah, absolutely. Long-term view, long-term thinking, right? Long-term thinking. You've got a long-term asset with a long duration liability and a 50 vol asset. If you're going to hold a 50 vol asset in Bitcoin, you should probably hold it for 8 years. If you've got a 100 vol asset in, something like MSTR, you're probably going to want to hold it even longer term than that. So long-term thinking, very helpful.
Look at the Apple chart. Look at all the 50% drawdowns in the Apple chart.
Amazon, any big company. Look at Tesla. I mean, Tesla had a 60% drawdown in 22, right? And then just got ripped back higher the other way. And that was a drawdown from almost it was like $1.5 trillion down to like 600 billion. Yeah. Anyway, so Leigh, over to you. Final thoughts.
Yeah, so for the bears that like to say that Bitcoin treasury companies don't make anything, or that it's just kind of ridiculous because number one, there's $100 trillion bond market to service, and their products are better. And number two, if you're a company that makes cars or widgets or whatever, you can build too many, and now you don't have a buyer. But there's no such thing as a Bitcoin that you shouldn't have bought.
Absolutely. No such thing as a Bitcoin you shouldn't buy. Over to you, Mike.
Yeah. Look, Ben Workman said it, don't get your conviction from somebody else or don't rent it. And I think that you have to look at these assets and think about where you're going to be in the future. After you've been in it for a while, like I said, when I showed the book right here, and the price, you could see it, is 9,000. And I was like, is Bitcoin ever going to get back above 10 grand? How do I say this? I don't want to say, hey, do I think the price action sucks? Yeah, it does. But with that, I have to be grateful for what I have. And it always comes back up. In 8.5 years, the only question is, how long does the down cycle last? And then it comes back up. And you're like, I wish I bought more in the down cycle. You always think back to that. You're like, so my view is, we're human like the people that are listening to us. We get that watching the down. Don't doom scroll. Keep on reading these feeds. And what I would say is, come to Las Vegas. Talk to us in person. Meet Michael Saylor. Meet the people that we're going to have there. I think that once you go to one of these events and you talk to real people that are there, especially our event, you're like, oh, these people really do, care about this. And that's the part I want people to realize, is that we see what's going on in the price. And sometimes, just recently, I decided to go on a motorcycle ride. I'm like, I'm not looking at the price, right? And I'm just like, I'm going to do something else with my time. So that's what I think sometimes, I don't know who said it. Sometimes the best thing to do is to do nothing and don't look at it.
Yeah. Go touch motorcycles.
Whatever brings you fun.
Yeah, absolutely. Thanks, Grain. Yeah, my final thoughts is the ecosystem seems healthy. Strategy balance sheet is incredibly healthy compared to where it's been in past cycles. There's new instruments that are fitting markets that haven't existed before. You got different capital pools that are buying these instruments that have never bought these instruments before. The plumbing and the architecture has changed. You've now got Bitcoin ETFs. The Bitcoin IBIT purchased 700,000 Bitcoin in the last 2 years. Some of that's GBTC, let's say 300,000, but IBIT, right? You got 500,000 Bitcoin that IBIT purchased in the last 2 years. They're going to be front running the 2028 halving. They're going to have all of their salespeople going to sell the best performing ETF on the planet ever and front run the 2028 halving. Well, we got a halving coming up, right, in 2028. Like, that conversation is going to happen. That is going to be hitting people's portfolios. That's on the horizon. And yeah, it's somebody else brought this up, and thinking about long-term generational holds here. The reason I got interested in this entire space, and the reason everybody's interested in this entire space, is because we're long Bitcoin bulls about changing the future, right? We want to upgrade the world. We want to upgrade the world to a digital money, digital scarcity. The world should be a better place. That's why we're here. And thinking about what that looks like in the future, companies are going to hold this stuff. And I want to be connected to the companies that are leading the charge here. And I think back to many conversations I've had with like my grandparents and my uncles and stuff. And when I was younger, they would say, "Oh man, I could have bought Apple at 82 cents." And my response was, "Well, you didn't. And here's where you're at." Right? Like, I don't want to tell my grandkids that I had the I bought strategy at, $20 and I sold it at 150 because I got nervous about a 70% drawdown in 2026 and I didn't have the conviction to see the future. And like, that's the difference here, is that I think this industry is worth spending time in, so much so that I quit my traditional finance job to work in this space full time, to do the stuff that strategy is doing, and to make the world a better place, and to accumulate as much Bitcoin exposure as I possibly can across many different avenues, and to fix the world, upgrade the world. So that's why we're all here. That's why we keep doing this every single week. That's why we talk about it. This is the biggest story in all of finance right now. It's the most read story in all of finance, and that sucks. But we're all in it together, and the world can be a better place. Cool. Thanks, everybody. Appreciate the time,
guys.
Yeah, Dan. Good luck tomorrow, and hope everybody watches. Mike, maybe you host a space if that works.
So I'll do a space after it if Dan wants to join. I think that'd be great, and we'll see what they say. I'll do a quick review, so I will schedule that. I'll just do a pop-up right after it ends.
Right on.
Right. Okay.
All right. Thanks, everybody. Appreciate the time.